my name is Sukand Ramachandran. I'm a partner in BCG in London, and amongst other things, I lead the trade topic for us globally.
Great. So trade, what a year we've had. It seems to have slowed down in growth, yet we see several reports about trade finance revenues from the banks continuing to grow. What's causing this?
Well, there's multiple things happening here. It's not one force. So globally, trade in general, before you get to financing of it, has seen its ups and downs mainly because of the various trade tensions. But that's offset by the fact that there are more and more supply chains which are global, not necessarily from developing markets to developed markets. It's actually a lot of it happening intra-emerging markets, intra-ASEAN type trade activities happening in there. So that's giving a positive boost to offset some of the decline from trade tensions and the like. Then you then come to banking and look at revenue pools from a banking perspective. So you get some up and down as a consequence of volumes coming from trade flows. But there is a little bit of margin compression coming through as you basically get more banks competing for the same volumes. But it's a little bit, it's not material. And we expect that to recover back in the next 8 to 10 years.
Yeah, okay. So I guess digging into the trade finance products themselves, how is the demand for these products changing and where do you expect that changing to?
So we know the secular trend from documentary trade moving towards more open account trade activities. We don't see open account being the only answer in the future. We expect documentary trade to remain. I think we were exchanging some information with the SWIFT guys recently. I think there is an asymptote of somewhere between 12 and 14%, depending on how risky the market economics are, of documentary trade in terms of by volume activity is still in there. So we expect the transition towards a more open account economy and more supply chain financing as a consequence happening. Yeah. But doc trade is still going to be there. And then as and when regional tensions arise, you'll get little spikes of documentary trade.
Yeah.
And one of the things which people don't understand or notice is the second order effects of as you have participants like Asian Development Bank trying to enable SME financing, as more and more SMEs come into the global supply chains, there will be a bit more doc trade because the risks are unknown. People will want more protection, especially when it comes to developing markets to developing markets, SME trade. So we'll see quite a lot of little transitions. Totality of it is there is still growth in the market.
Yeah, no, very interesting. And we actually had Stephen Beck here sitting on this very chair yesterday talking about those exact problems and also opportunities for correspondent banks there. So I guess talking about the recent report which we covered just this week actually on digital ecosystems within trade finance and we've discussed some of the pain points there. It's great that you're talking about the non-distributed ledger technology initiatives as well as the DLT consortia and networks. What are the key trends you're seeing in the market here in terms of for trade?
So I think everybody's on a relentless drive towards efficiency and optimization. So digital is a core part of the solution space. The challenge in trade is it's not a single party or a two-party transaction, it's a multi-party transaction. Even within the banking domain, there are multiple banks involved. And then you add on the fact that there are shipping agents, there are insurance companies, there are customs agents. So the number of parties involved in a transaction are quite material. Now, because there are many parties involved and they all have very many different bilateral and multilateral ways of exchanging information, there is complexity in the process. The good news is there are enough legal standards at the moment which allows you to do the global trade. If you look at basically how it works, you're often surprised by the sheer amount of paper which travels through the ecosystem. Now, what we're saying is, in the future, we would want most of this to be digital because there's no reason this can't be digital. The challenge you're going to have is how do you agree on a set of digital standards to exchange this information? And I think part of the value of these ecosystems developing is as you develop ecosystems, you pull in multiple parties into the ecosystems, and the ecosystems are defining data standards. But equally, if you see the report, we also call for don't create the ecosystems as little islands of different parties cooperating. We need the ecosystems to cooperate with each other as well, because that's the only way you get to a global standard, right? And we don't believe trade is going to be driven by one player or one dominant standard unless it's underwritten by somebody like the ICC or the SWIFT guys. But what we will expect all these ecosystems to do is to develop and cooperate progressively towards a common standard.
Yeah, and absolutely, I couldn't agree with you more. The standardization and probably needs to be led by a multilateral organization such as ICC or WTO needs to happen to allow for for that interoperability. I guess going back to the key pain point within the digitization and the paper-heavy documentation and process within trade finance, is DLT actually addressing those pain points, or are we covering up a wider problem? Because we tried to digitize trade for the last 2 decades.
Yeah, so I think DLT helps in some places, and it's equally sometimes an overhyped technology. If you went back to Cybus 5 years ago or something like that, or even 4 years ago, Boston and Singapore, DLT was the story, and it was the sort of the solution which is going to solve world hunger almost. Like anything and everything was solved by DLT. I think we now got to a more balanced view of what DLT can allow. I think there are inherent technologies in it, like the ability to have a distributed ledger, not necessarily having full replication, an ability for you to automatically trigger smart contracts when events happen in a particular transaction lifecycle. Those parts of it are very valuable. Yeah. But equally, as something like the Trade Information Network is proving, without being in a blockchain technology, I don't need blockchain to solve for this. I can have a centralized register, which you all subscribe to, which will solve for some of those pain points. The important thing is not about the technology, it's about people cooperating on a common set of definitions and standards and being willing to open up the ecosystem to more and more participants so that you're reducing the friction of having bilateral and multilateral discussions. Okay, great. So what does the future look like? What do you think are the key things that need to happen to enable fully digital trade? There is a positive view, and then there is a sort of slightly pessimistic view. The glass half full positive view is, as these ecosystems develop and start realizing the benefit of being a bit more open, being more inclusive for participants in, you'll pull more and more people into common ways of interactions and standards, and you will reduce the friction cost of interacting with each other, which is quite an important part of trade, right? And multiple different ecosystems will learn how to transfer information between the ecosystems, so then you'll get interoperability and standardization. So my sense is, in somewhere in the next 5 to 10 years, you'll start getting more and more activity, very digitally initiated through to digitally fulfilled, but going through very many different pathways. It won't be a simple, I send it to you and it's all digital. Yeah. It's possibly going through quite a lot of ecosystems before it gets to you, with all good checks and balances built in as a consequence. Yeah. The slight pessimistic view is, if one of the reasons 20 years ago, I would say, even though many banks and bank consortia have been coming together to try and digitize some of things, the reason they haven't succeeded is somewhere in the way you start getting defensive and you say, look, I need to protect this because I have some competitive advantage. Therefore, I'm not going to allow other participants to participate in this. Yeah. Inherently, the moment you do that, you're restricting the share of global trade flows, which is going to be coming through this ecosystem. The moment you do that, it's no longer going to be driving a standard. Even if you're the biggest trade bank or the biggest shipper or the biggest customs or the biggest port, you're still a very small part of global trade, right? In terms of total activity. So you need the openness and the willingness to embrace openness and bring more and more participants in through multitudes of ecosystems. It doesn't have to be one consortia or one ecosystem, but you need the openness for all of them and the interoperability for digitization to happen. The reason we haven't succeeded in the last 20 years is somewhere people said, this is my platform, I want to use this. And you closed it down. The moment you close it down, you're not going to get acceptance. Yep. Great. So the future is open. The future is going to be more open, more common standards. If you do that, it's going to be more digital and less painful. Yeah. Great. Well, Sukand, thank you very much for joining us on Trade Finance Talk today, live at Cybos. Thank you, Deepesh. Have a good Cybos.